The important thing is the numbers.
Okay.
Goods producing 17, manufacturing down 4, but construction up 19. That's pretty good. It tells you that maybe the household sector, the residential housing sector is doing okay.
Yep.
Service providing has been the nut of this, 156. I will tell you well, that's what I got right here. I come up with a random number every month for government hiring because there is no actual way to forecast it. I came up with 20,000 because it was the 3-month average of the prior 3 months. It was 22 this time. Leisure hospitality doing well. Temp services doing well. The retail number is interesting to me because we're getting these anecdotal reports from the department stores that they're doing a lot of hiring, and this is down 8,000. Exactly, Ken. That's exactly what it's going to get to. There's an expectation of huge hiring and probably huge hiring going on, but because of the seasonal adjustments, they're not quite meeting the huge hiring. I want to talk about Austan was interested in how the household survey, how did we get to 4.6? We lost 226 in the labor force. Second month in a row that you've had a dropout. You were down 195 in a generally kind of very slight rising trend when it comes to the workforce. You've had people coming back into the workforce. You've had the participation rate going up. This went the other way the last couple months. But employed in the household survey, 160. The number of unemployed falling by 387, leading to this very nice U6, which is the broader, nice, I shouldn't say that. Relative to where it's been, it's nice. It is still elevated, 9.3. From what it's been. It was back 9.7 in September. Those unemployed.
60, what are we, 61, 62?
On the participation rate?
Yeah.
I fudged that joke because I don't have it in front of me, but I'm going to look it up as soon as you start asking Austin.
But there is actually like a theory that matches what's been going on lately, which is that when you get close to full employment, then you don't get big surprises on the upside because it's starting to be hard to find the workers. Right. But you're close to full employment, so the economy's doing fine. So you are trying to hire people every month. And so if you get a reduction in the variance of the jobs numbers from month to month, then it can be a signal that you're close to full employment. And so we should start to see more wage pressures.
Trump.
Yeah,
62.7.
So they're going to have to bring people into the labor force to keep this growth going. If we are at 4.6, you got to start to worry about Phillips curve effects and inflation. That's why.
The market is worried about inflation.
If you're at the Fed, what do you do right now? Would you go more than people are expecting? If you see a number like this?
I bet they won't go more than people are expecting, but I bet they'll go more frequently than people are expecting.
I want to just layer in Joe's idea on this, which is, does the market really care anymore? When you look at the 2-year already being 113, 112 right now, it had been as high as 114. There's scope now for the Fed to move without being major action underneath. You know, Melissa may have a good idea, and this is because
I think that if they come out in the December meeting and they indicate that the trajectory is going to be faster, that's going to freak the markets out. Right now, we're just pricing in December rate hike. We're pricing in a couple next year. I think it's sort of the jury is out. A lot has changed for the equity markets at this point. So
this was my story yesterday, Melissa, which was that how does the Fed factor in the change in the market, which is a reality for them because it's financial conditions, it's a higher interest rates, stronger dollar, stronger stock market, yet the policy that the market is trading on doesn't exist, won't exist for months, and may be something less than they've already factored in.
If Melissa's dynamic is true, and we start on a series of rate increases potentially even faster than what people think, the dollar's going to go way up. Manufacturing's going to start taking some punches.
Let me ask you a question that's not scientifically based. I was surprised the first 2 weeks after the election at the number of people I know that were supporting the Democratic Party that have said to me, I don't know why I feel good, but I feel good.
Ken, I heard that as well.
Huh? Ken, I don't think you know many Democrats.
Ken, no. I heard exactly what Ken's talking. Ken, I want to support you on that.
I picked up on that.
I think
the CEOs got bullish. They got bullish.
Almost overnight.
Yes.
And look, folks, I think these well-heeled, well-educated economists at the table, with all their PhDs, would agree there's a capital X factor in this, and it's animal spirits.
Right.
And we don't know, and the debate has been that the supply side has been constrained because of regulation
and taxes,
or from the Democratic side, they would argue it's been constrained from the demand side, that the demand has not been there, that if you wanted to borrow money in this country to build something, you could have built it. Right. And there was never any constraint on that. So this is where we are right now, and we will see.
After you built it, if you don't have a reason to have it, no matter how cheap it is, you don't build
Right.
it.
So, but if capacity utilization
argument of utilization.
But I think that we saw some
Not
things
over.
happen, and I wrote about it just before it happened, and I think that what I was speculating about ended up being the truth. And so I think we understand what happened. Justin Wolfers put out a paper. We talked about it on the show, that the Trump effect was going to be big and negative for the market. But then Trump was elected, and that didn't happen. In fact, it went the other way. The piece that I wrote just reminded that it was actually data from Justin's own paper that Republicans have always been good for the market. Like if a Republican wins, the market goes up. And so in the paper I wrote, I just speculated that if Trump is elected and then he acts like a normal Republican, then the market will really celebrate. Right? And so the market is nervous that he's going to come in and start a trade war on the first day, but he didn't do that. He's had a great transition. He's picked good people. He's spoken like a sensible Republican, and the markets are celebrating.
There's a lift psychologically because it's against both the Democrats and the Republicans. We're fed up with the nonsense of these people down there being elitists that we know better for you what you need than you do yourself. I think there's been a revolution psychologically in this country, and I think Trump cashed in on it, and it isn't going to stop.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.